Good afternoon, my name is Jordan Lambert, market analyst at Gelatoma Management. Gold has been finding a new range since falling $40 on Friday, trading in the 1320s for the most part. The impact of the surprise Fed tapering decision was momentary for gold, and as the euphoria has subsided, it seems the metal has quickly become victim again of renewed taper timing second guessing. Not even dovish rhetoric from Fed officials over the last few days has been a catalyst for the market to climb back towards the 1375 high of last week, which kind of sets a bearish scene for the commodity over the next few days. Nonetheless, be wary of higher safe haven demand as the US debt ceiling battle begins hitting headlines again within the next 2 weeks possibly, and gold could be pushed steadily higher from a weakening dollar as well, so just be aware of that. Right, let's just take a look at the charts. In the medium term, it still looks bearish for gold, but in the short term intraday view, we could see some upside movement. Just looking at this 30-minute chart, we have a 24-hour resistance level around 1330. You can see that this level has been touched 1, 2, 3, almost 4, and if it gets hit a fifth time, potentially it could go higher. So at the moment it is range bound, but there is a slight bias towards bullish sentiment according to the high lows that are printing on the chart. So we are seeing higher lows here, and we're not really seeing significant lower highs. So I just think the sentiment on the market is slightly tilted towards the bullishness. So we can draw almost an ascending triangle here. We could even draw just a symmetrical triangle like so. So the Q to buy would be if the bulls can push assertively higher than 1330. So if we can go higher than 1330 with some conviction, it could go higher, and next possible target levels would be 1340 and possibly 1345. So yeah, look to target 1340, 1345 as possible target levels, because they might be potential resistance levels. For wannabe buyers looking to get in a few dollars early, this symmetrical triangle that I've drawn, as price breaks here, you could execute a buy. It is a little bit risky because it wouldn't have broken resistance, but for those bulls itching to get into the market, that might be a cue to get involved. But just be aware that if we do get a failure of a breakout of resistance, if the market continues to fail to push higher than 1330, which is quite possible because at 1330 we are seeing quite a sudden amount of selling every time it approaches this level. So if we do get a failure, look to short. Look for signs of a failure of a breakout and look to short, especially if it goes lower than this. If it breaks to the downside, breaks below this bottom side of the triangle, that would probably confirm that the market isn't going to go higher than 1330 in the near term, and look to short because it could test yesterday's low of 1313. But as I say, I'm still slightly more bullish than bearish. In the short term, we could get a spike up to 1340. So yeah, thank you very much for listening to me, and I'll speak to you again tomorrow.